This is Uranium Spotlight on Tuesday, October 15, 2024. Brought to you by Purepoint Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Purepoint's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, the West scrambles to break free from Russia's uranium grip. Uranium prices saw a slight increase last week, with the spot price rising 50 cents to $83 per pound U3O8. Despite this, overall demand in the spot market slowed, with activity falling to levels typically seen in the summer. Only 3 transactions were reported, with one on Monday and another on Wednesday, pushing the price up to $83.50 before falling back to $83 by Friday. Bids and offers softened as the week progressed, and participants are now focusing on the upcoming NEI IUFS meeting, which could stimulate more spot activity. However, for now, bids, offers, and prices remain unchanged from last week at $83 for delivery from major suppliers like Cameco, Converdyne, and Orano. The uranium term market remained quiet with no new demand or contract awards. Utilities in the U.S. and abroad are evaluating offers for larger term deliveries between 2026 and 2035, though no new agreements have been finalized. Notably, one non-U.S. entity is seeking uranium supply options for up to 20 small modular reactors, signaling continued interest in future demand. The uranium market has been increasingly divided between East and West, and this split has only deepened in recent years. As is regularly discussed, China and Russia have aggressively purchased large amounts of uranium, particularly from Kazakhstan, reshaping global supply dynamics. With Kazatomprom, the world's largest uranium producer, mostly committed to supplying the East, the West has been left scrambling to compensate for the reduced supply, all while simultaneously trying to secure a stable supply of enriched uranium. A significant concern for the West, particularly the U.S., is its reliance on Russia for enriched uranium. Currently, Russia supplies 43% of the global market's enriched uranium, but efforts are underway to phase out Russian involvement in the nuclear fuel cycle. The U.S. has already put a ban on Russian uranium imports, with all requests to buy any form of nuclear fuel from Russia now requiring a waiver from the Department of Energy. This restriction is set to become total by 2028, after which no further waivers will be granted. Recently, concerns arose within the U.S. Department of Energy that Russia's state-owned fuel supplier, Rosatom, had been rerouting uranium deliveries to U.S. buyers through China. In response, the U.S. raised the tariff on Chinese imports of uranium from 7.5% to 25%. Whether this move will successfully block Russian uranium from entering the U.S. market remains to be seen. While the U.S. has been firm in its stance, the response from the European Union has been more fragmented. Some EU countries have moved to eliminate Russian uranium from their supply chains, while others have continued business as usual. French state-owned uranium miner and enricher Orano is facing challenges in securing investment for expanding enrichment capacity due to this inconsistency. Currently, Orano accounts for about 12% of global enriched uranium production, but they're aiming to increase that, as demand from Western nations, especially the U.S., has risen since Russia's invasion of the Ukraine. The U.S. Department of Energy has also stepped in to accelerate production of high-assay, low-enriched uranium, or HALEU, a specialized fuel required for advanced reactors. 6 companies, including Orano, have secured DOE contracts to supply HALEU. These companies are BWXT, Centrus, Framatome, GE Vernova, Orano, and Westinghouse. Let's break down the roles of these companies. BWXT has a long history of manufacturing reactors, particularly for military use, which positions them well for the construction of commercial reactors worldwide. Centrus, a once major U.S. fuel and enriched uranium producer, is making a comeback after filing for bankruptcy. While rebuilding its operations, Centrus has had to secure a waiver to buy Russian uranium to maintain its business until its facilities are fully operational again. Framatome is a French state-owned fuel manufacturer and engineering firm. GE Vernova specializes in parts for power stations globally. Westinghouse is a prominent reactor builder and fuel manufacturer. Among these companies, Orano stands out as the only one with both mining and enrichment experience, which means it's positioned to take on the significant task of supplying uranium for a new fleet of U.S. advanced reactors. Orano has already started expanding its uranium enrichment capacity in France by 30%, laying the foundation for further growth. They're also planning a new plant in Tennessee to serve the U.S. and broader Western market. However, the supply deficit in uranium concentrate is another challenge that must be addressed. The global demand for uranium far exceeds current supply, and Orano is taking steps to close this gap. They're currently constructing new mines in Mongolia and Uzbekistan while working to expand the lifespan of their mines in Canada and Kazakhstan. Furthermore, they're exploring the potential for expansion into adjacent areas and even new regions. Geopolitical risks, such as the recent coup in Niger, are adding to the complexity of securing uranium supply. Niger's new government revoked the lease on one of Orano's mines and has suspended uranium exports. Even at Orano's remaining active mine in Niger, production has dropped to just 40% of its previous output. As a result, Orano is looking to diversify its uranium holdings to mitigate the impact of such events. One notable company missing from the recent DOE contracts is Urenco, a UK-Dutch-German consortium that controls 31% of the world's enrichment capacity. Urenco is taking steps to help reduce the West's reliance on Russian uranium, including expanding its enrichment facility in New Mexico, which will boost production by 15% annually. Urenco has signaled its intention to further increase its U.S. capacity, noting that this is just the beginning as demand continues to rise. The broader picture remains clear. With Russia controlling 43% of global enrichment capacity and Kazatomprom accounting for 40% of the world's uranium concentrate production, Western companies like Orano, Urenco, and Cameco must significantly scale up their operations to meet growing demand. Cameco, based in Canada and the world's second-largest producer of uranium concentrate, is also preparing to boost production in response to rising demand. However, specific details on where and by how much they plan to increase production remain unclear. One thing is certain, the world is heading towards a uranium supply crunch, and the West's current production capacity lags significantly behind the East. But companies are making strides to close the gap, and investors should be paying close attention to how these developments play out in the coming months and years. Uranium Energy Corp, or UEC, released its fiscal year 2024 report last week, highlighting some major developments that investors are paying attention to. In the report, UEC detailed the successful restart of uranium production at its Christensen Ranch ISR operations in Wyoming, a significant milestone for the company as it ramps up U.S. uranium production. This comes at a crucial time when domestic uranium supply is becoming a key focus due to the geopolitical risks impacting global supply chains. The report also underscored UEC's strategic acquisition of Rio Tinto's Sweetwater plant and other uranium assets in Wyoming. This move further strengthens UEC's position as a leading U.S. uranium producer, adding valuable processing infrastructure and expanding its ISR operations. Financially, UEC remains strong, with zero debt and over $330 million in cash, giving the company flexibility to invest in future projects and navigate market conditions without financial strain. These developments position UEC to take advantage of rising uranium prices while addressing domestic supply needs. For those tracking uranium equities, this report shows UEC is making significant strides, with its production restart and acquisitions playing a major role in its growth strategy. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.